to now close to 10% in trade today. Let's also welcome on board Mr. Deepak Shenoy of Capitalmind Mutual Fund. Deepak, hi, good to be speaking with you. Good afternoon, first of all. Give us your reading on how you're looking at the texture of the market, because this week so far has been absolutely subdued and we seem to be stuck in a very narrow band. How are you looking at the market overall?
So I think overall we've not had major run up, compared to, let's say, what we've seen in the US and some of the other markets so far. But the market hasn't gone up too much or down too much. I think it's kind of gauging time for now. The main thing is the results seem to be quite good. We're seeing mid caps, small caps perform extremely well in terms of results. We're seeing some movement in terms of large caps as well, more than 15% median earnings growth in the top 100 so far. I feel that this is actually quite a good result season compared to what I expected because of the Iran issues. I thought we'll have a subdued quarter, but we have got a significantly high earnings growth quarter, nearly 20% plus in mid and small caps. So at some point, the market will start paying credence to at least this factor that the fundamentals are decently in place. We will see a lot more, I think, in the next few months. But the markets are just, I think, biding their time. Maybe they're waiting for interesting movements that are happening internationally. There's some issues around US debt, there's issues around Japanese debt. But in general, we haven't seen major inflows from FIs or major outflows of any sort. So I would say this is just one of those you can build positions in stocks that you like kind of season.
Sounds interesting, and here's looking forward to that uptick in markets that we're all waiting for. But Deepak, give us your sense on which sectors are looking good, because now on a daily basis, we're seeing very sharp sector rotation take place in the market. On one day, you've got PSU banks that are doing well. Then they're extremely under pressure. On the day where the market is overall under pressure, you've suddenly got an IT index that is taking the lead from the front. How are you looking at sectors right now? Anything looking attractive particularly?
So I think core at some level, manufacturing, even some form of auto ancillaries, we're seeing some movements. And these are not one day, 2 day. I'm looking at like 3 months, looking at earnings, looking at growth in some of the mid cap banks as well. All of these are positive. They've seen some kind of movement upwards. The large cap banks are not doing very well. I think that's a place where you're not seeing great results as well in comparison with the mid caps. But I would say here the mid caps are where the attractive part of the universe is in the banking and the financial sector. It's also happening in mid cap manufacturing, in mid cap pharma as well, is where you're seeing some moves. Uh, and I'm looking at more from a combination of both results being good and the stock market giving some presence to them. IT is, I think it's a very volatile sector. It's still has more downtrend issues than uptrends. But I mean, again, it's a risk-based thing. So if you're a person who's a risk taker who wants to play for a rebound, then there will be some more rebound that will likely to happen in IT than will probably happen in any of the other sectors because IT has been beaten down so much. Overall, I would say, till November, I don't expect a major change. There should be some interest rate based moves abroad as well. And that will kind of, lag India. But this is a great time to build positions because the next 5 years, I think, is fairly good for India in the longer term perspective. Not really bearish, but not extremely bullish as well.
Uptick on that stock. Deepak, coming to you on Jubilant's numbers, and I just want to get a view on you from the entire QSR space. This time around, Westlife has done well. Devyani has been a positive surprise. You've got Restaurant Brands Asia that has done exceedingly well for itself, and the first take on Jubilant at least seems like it's an inline set of numbers. Do you believe this recovery is finally here for some of the QSR names, and more importantly, do you believe it's here to stay?
So I haven't yet tracked too much of these QSR numbers, to be honest. And I think while some of these stocks are quite expensive from a P multiple perspective, this is the first time they've actually shown some growth. Perhaps I haven't seen the numbers, but I would say In general, I would say they have been a little expensive. So these are more technical or momentum plays than they would be or based on fundamentals. Don't have any comments on the individual stocks, but in general, you will find that a stock that has a high PE, you would expect high earnings growth. And if there isn't, the stocks tend to correct a lot more. Then they tend to go up if the earnings are in line or close to estimates. So I would say you got to just be careful over here about how the stock prices react versus how the fundamentals do. I unfortunately don't have I haven't seen the numbers closely, so I don't have any comments on the individual numbers.
No worries on that front. That's the note. I mean, that's the uptick coming in on QSR as well. But also give us your sense on how you are looking at the metal space, because of late we've seen quite the swing coming in over there. Globally, we've seen aluminum prices have also seen a very sharp uptick. Yesterday, you had names like Hindalco, Nalco that were doing well in trade on the back of this aluminum uptick. Deepak, how are you looking at the metal space?
So metals, I think they've done a recent run recently. We've seen some of them retreat quite substantially from their peaks, and some of them are related to supply. So there is a supply return of supply coming in aluminium because some of the supply that was closed because of the geopolitical concerns and because of an energy issue earlier, uh, have started to see some opening up. There is also, copper has this thing of it rises and then more supply starts coming because copper is abundant, and then it's a cyclical thing. So the cycles last maybe a year, maybe sometimes 6 to 8 months. So I would say in general, the metal space has seen a bit of a run up, and you have to treat it as a cyclical, and then the ones that are in the top of their up cycles, you're probably not going to see a lot more in them. Gold and silver are seeing some kind of a return from their lows, but we'll have to see if there is any more, of a deeper crisis that happens that drives more demand here. But I would say in general, this is more of a bear market run on gold and silver because they're down about 25, 30, 40% from their highs. So I don't really see a major chance of a massive up move in both of their prices meaningfully here. So, and they're not industrial metals. So there's not that much of a non investment led demand in many of these sectors, in many of in gold and silver.
Afternoon. Uh, how are you looking at aluminium as such? The Q1 numbers were better. There was better, EBITDA per ton realization which came in, but of late there has been softness in the prices as well.
Yeah, so I mean, actually, the problem is aluminum stocks lag the aluminum prices. What happens is you reprice your aluminum stock inventory according to the price at the end of the last quarter. So therefore, obviously, your results look slightly good. But if prices continue to fall, both forward realizations and inventory repricing will happen at lower levels. So therefore, there will be a retreat in earnings. So you would typically find that aluminum prices in the international markets will perhaps lead the trend in stock market returns of these stocks. Luckily, we've not had too many aluminum players try to announce way too much capex in the aluminum sector. But you have to understand here that if aluminum supply comes in because of plants that were shut abroad, resurging or coming back to life, then you would not have a great aluminum price realization going forward. And that is where there may be a problem because some of these stocks have run up to extremely high PE values as well in an upcycle, which is usually rare. So you would not want to venture too deeply into this as a long-term story. It's more cyclical, and I don't think we're at the beginning of an upcycle here. I think we're more towards the end of it.
How do you look at data center plays here, whether it's in form of capital goods or power ancillaries?
So I think power ancillaries does make a difference because power is, I think, usable not just in data centers. Everywhere in the country, there will be a demand for power, whether it's because of industrialization, it is because of generally more focus on manufacturing and so on. So there is a multiple areas of focus that you can actually build a position on. but you would not find the same in terms of infrastructure because they are more like one-timer plays which happen on a project basis. So you'll see some bump in revenue right now, but eventually, if the data center plays do not generate a lot more data centers going forward as well, and data center prices are likely to come down quite substantially because as the supply of memory, as the supply of chips starts to increase, you're going to find that some of these elements will not be able to command the price points that they do on a per hour or per token kind of basis that we're seeing right now. And that will dull the investment climate for data centers going forward. So, good play right now, maybe not last more than a year and a half from here. That's my take on it.
And so you're also seeing the counterplay of IT also coming in that sense.
Yeah, I think IT should come back at some point, but right now the issue in IT, at least in the large cap IT names, is that their battles with AI and the general, fear that seems to be around the marketplace of whether how much of the automation can be done by AI, how much of it will have to be outsourced and not, and budget constraints because companies abroad have been pausing because of all the geopolitical and then generally tariff or something else concerns that are happening. New projects are only trickling in, but I do feel in the long term they will make the best out of it. The problem is the long term can be really long away. So one good thing about is usually prices lead fundamentals in some of these beaten down sectors. So you might be able to actually get an idea of which stocks are starting to do well. Some of the large cap IT stocks have actually announced decent AI based moves as well. So that there may be a good longer term future in there, but don't expect anything for the next 6 months. I don't think contractual increases are happening meaningfully in the next 6 months. It may things may start to improve next year, perhaps in next year's budgets as well.
Deepak, thank you very much for joining us today and giving your perspective on various sectors. Thank you.